what's better, stock investing or rental property investing? If you could just clear that up here for the audience, I don't think we need to go any further then.
Yes.
You can do
And it
that? Great.
depends.
Perfect. Yeah, that's a perfect answer for a financial planner. Thank you. No, I think maybe we'll go into let's start with some of the comparisons between rental property investing and the stock market, and then also how you approach a financial plan to incorporate both of those aspects.
Sure. Well, first, just to clarify for your audience, financial planning is a process and experience to help you make better decisions about your finances to accomplish specific personal and professional goals. So there may be recommendations to go do things like get an estate plan, talk to an accountant, redo your taxes, invest in a particular strategy allocation or purchase different insurance. Financial planning is 100% about advice, and it's not tied to the purchase of products. The marketplace is really good at colluding that. Most people that see someone who's a financial advisor, they call themselves a planner, but really they're selling investments or insurance. And I'm not trying to belittle them and say they can't give you some planning advice, but financial planning is really having a process, building a process, and then it's like software. A lot of people think of it as like, oh, I'm done. Like it's waterfall, but that's not reality. It's more like agile software. You're going to do something, you're going to build a process, and then life's going to happen, and you're going to adjust that plan along the way.
Mm-hmm.
So, with regards to your investment question of like rentals versus investments, I think what's great about the marketplace that we have is an opportunity to get and see different places you can generate returns as a passive investor and as an active investor. So to kind of answer your question, like which is better, what serves it, they kind of have different purposes. When you invest in the stock market, you get the ability to diversify across a lot of different industries. You have a major of different ways to generate returns. You could earn interest off of owning bonds. You could get dividend payments. You could own limited partnerships and get distributions. So there's kind of it's not necessarily one versus the other. I would say they're a complement. And if you are investing in real estate or interested in investing in real estate, kind of like we touched on yesterday, I think it's healthy to know what can you expect from the bond market? What can you expect from the stock market? And if you're going to go deploy $100,000 and you're going to make $3,000 or $4,000 a year owning a rental property, but you could go to the stock market and just have a few phone calls, listen to some conference calls, and talk to an advisor and make 6 or 7. That's not a good rental property investment, most likely, unless there's a huge upside capital appreciation event in the future. You're really getting paid below market, and you probably have a lot of work to do for that $3,000 to $4,000. So it can help you kind of balance out, is this a good risk or not? I do have clients that will come to me, hey, should I buy this to rent it out? What do you think? And I'll be like, well, what's the cap rate? Like, what do you expect you have to put into the property? What are the cash flows? What are the property taxes on it? What are the major capital expenses or expenditures that could come up with this investment over the next 5 to 10 years? And then how do you plan on financing it? These can all kind of help you back into getting an idea of where that investment could land, and then comparing that to alternatives. If you're going to if you have the opportunity to make 20 or 30% per year compounded or 15% per year free cash flow after all your expenses, that might not be a bad way to deploy your money. But the other side of it as well is real estate tends to be very illiquid. And then depending on what market you're in, it could cost you 4 to 9% just to sell and get out of a bad investment, where you can kind of wake up in the stock market and the market could punish you 9% overnight, but you could just liquidate it like that. You have no carrying costs. So it's not one's better than the other, but evaluating and positioning your money to have reasonable expectations, I think, is really important for any investor, whether you're doing direct investment or if you're just kind of letting someone else do it for you.
I hope you got some value out of this portion of the interview with Kit Lancaster. If you did, hit subscribe below. He's a good friend of mine. He's a great financial planner who offers a ton of great advice in the rest of this interview. So if you want to hear the full interview, just click on the link in the comment section below. Also, you can search Living Off Rentals on any podcast player that you typically listen to, and you can subscribe there. Also, I'd love to hear from you on who you'd like me to interview on this channel. who is it that's a rental property investing expert who could really offer some great advice to this community. I'll reach out to them and see if I can get them to come on and do an interview with us. Also, we have a really active and engaged Facebook community at the Living Off Rentals Facebook group. So go on over there, join the Facebook community, ask a question, get engaged, meet some other people who are some really great rental property investors, and I will see you in the next video.